TFNN. Headline News Update. Here's Tom O'Brien.
Welcome, folks. We have the Dow Industrials down 11, Nasdaq's down 38, S&Ps are off 4.5. Gold contracts trading up $5.20 at $1,248 an ounce. We have silver up 9 cents at $17.20 an ounce. Platinum is up $4 at $1,017 an ounce. Light sweet crude up 98 cents at $45.02 a barrel. We get the crude numbers coming out at 10:30 today. Bonds, you have the 10-year note up 8 ticks, 129.14. 30-year bond up 22 ticks, 161.29. 2 p.m. Statement by the Fed's going to affect that bond market in a big way, and the S&Ps. King dollar down 203 ticks, trading at 94.34. The euro is up 19, trading at $1.13, and the yen is trading down 6 at $1.11. We go over and we take a look at the S&P. This is what you have. The cash S&P, folks, trading out at the price point of 2090. Bottom line, sideways move out here. What I do expect, you're going to see this thing grind lower and lower. NDX 100, NASDAQ and the NDX 100, that is the lead dog on the way down. You had Apple come out with the numbers. Revenue went down, first time in 10 years. You get the Qs down $1.22. You get volume behind the move. The Qs right now are at $1.07, 107. They're making their way into the $106.73. And what you are going to have between the Fed coming out at 2 o'clock this afternoon, that's the first part. The second part is that you have Facebook after the close today. You have Amazon after the close tomorrow. Both of those equities are heading lower, and they have an expansion with volume. That's going to give the NDX 100 conniptions in the next few days. Gold contract. What do we have with gold now? Gold, bonds, and the dollar today, folks, coming up to the 2 o'clock number, are going to have high volatility. Gold contract right now, we have 80,000 contracts traded. You're at up $5.20. You're at $12.48. Gold has a high volume high at $12.72, which was the high last week. Has a high volume high at $12.87. The divergence is like this. Right now, gold looks like it's going to make a run for one of those. Let's go into the dollar index. What we had with the dollar index yesterday was that the dollar index rejected lower price, had lighter volume. What we have out here today is that it's down 173 ticks. That being said, it still has lighter volume. So as we come up to this 2 o'clock time frame, it's going to be crucial to see what this dollar index does. This morning thus far, you did have a futures trader that pushed into it. Yesterday, we had someone push into it right at the lows. So when I take both of those into consideration, the operators, the larger operator, are selling the dollar. And I expect as we come up into the 2 o'clock time frame, you're going to see them selling the dollar. That is saying that it's still going to be a Fed statement that is very dovish. What did that do? That'll basically put some more juice under the commodity markets. Let's go over to the notes. We take a look at the notes. What the notes have done is this. Yesterday, the notes went down with 1 million contracts. Today, we've done 426,000 contracts, which is not bad. You get a small counter trend bounce. That's the notes. The 30-year bond was going right into its lowest swing point and had the volume. It had the volume to basically break that baby. It's sitting right at that swing point right now. The swing point that we're talking about, the 30-year bond right now is trading 161.28. It's 160.31. That's where we're going with this. So when you wrap the baby up, what are we looking at? We're looking at Apple in itself is putting pressure on the Dow. The NASDAQ, forget. The NASDAQ is dead dog. Dow, S&Ps, you're going to see a slow turn down. NASDAQ 100, fast turn down. Why? Because you got Apple, you got Google, you got Microsoft, you got Facebook, you got Amazon. They're all going to lower price. So they're the largest weighting structures inside the NDX 100. King dollar is going to be the number. We'll see where that shakes out at 2 o'clock. This 10 a.m. update is brought to you each and every day by Everbank. For more information on the products they offer, you can give them a call at 855-750-4051 or visit everbank.com/TFNN. Have a great day. Have a safe day. Look forward to speaking to you right back here tomorrow morning, 10 o'clock.
If you're looking to discover a new financial resource and diversify your financial portfolio, don't miss out on the Market Safe Commodity Solution CD from Everbank. This is the second running of their popular 5-year U.S. dollar-denominated CD, which gives you exposure to 8 equally weighted commodities, including WTI crude oil, gold, silver, copper, nickel, soybeans, corn, and sugar. With annual pricing caps of 70% per component, you could earn up to 70% upside payment at maturity if the commodities increase in value across annual pricing dates. And should the opposite occur, your principal is 100% protected. Keep in mind, returns are based on CD performance. There's no annual percentage yield or periodic rate of interest on this indexed CD. Don't miss out. Take advantage of this financial resource designed to grow with the times. The May 19th funding deadline is quickly approaching. So hurry over to everbank.com/TFNN for the CD's term sheet and other important product details and disclosures. Once again, that's everbank.com/TFNN. This advertisement is sponsored content. Everbank is a member FDIC.